Good morning, everyone. Welcome to Midwest Market Solutions Insider Commentaries. It is Tuesday morning, June the 20th. It's a beautiful day, a lot of sunshine, warm temperatures. In fact, I think it's going to be a little warmer this week than what was previously forecast. But the market right now is keyed on the rains in the eastern Corn Belt. It's focused on the cooler temperatures that are in the forecast and rain that's in the forecast as we're trading lower overnight. We started off the overnight trade higher to sharply higher as spring wheat ratings fell much lower than expected, and that proved to be about the highs of the night as we kind of drifted lower. In fact, we closed about 10-12 cents off of our highs in Minneapolis wheat, and that allowed everything else to fall back. So either the weakness in the wheat allowed everything to drift lower, or everything else was that much lower that it pulled wheat off of its highs. But spring wheat certainly has a bullish story here that's not over yet. The dryness is expected to continue. We could see continued crop stress in those areas. Wheat ratings expected to fall again next week. We're pulling back in prices in here, and that is an indication that volume is starting to slow. A lot of the shorts have blown out of their wheat positions, and now it's left with speculative buying and some end user buying pushing prices higher. In the grain trade, you look at the crop ratings, corn did not improve as expected, but you look at the state by state ratings and all the key states did improve. Iowa, Illinois, Indiana, Minnesota all up last week. Kansas declined, but it's interesting that soybean ratings improved quite a bit in Kansas while corn ratings declined. So overall, you look at the key growing states in corn and soybeans, it's no wonder we're down in the overnight trade as these ratings don't tell us a bullish story whatsoever. And with the forecast out there, that looks to be a little bit bearish as well. So we did take out a key support area in corn overnight at 393. The next area is at 388. We need to bounce off this area, or we're going to find a lot of sell stops underneath it. Options expire on Friday, and that's not a bullish situation either, with those options going off the board. July futures going into first notice day next week. Really, the only bullish possible story here left is acreage numbers in the month of June, at the end of June, June 30th. Could have a surprise in those acreage numbers. That could be a bullish scenario. But other than that, it's hard to really put a bullish script out there with forecasts that we are seeing. There is not a lot of rain in the Western Corn Belt, a lot of crop stress starting to show up. I did a little driving from our Missouri office to our Iowa office yesterday. A lot of stress along the highways is being noted in corn and in soybeans. The livestock trade, this is what we've feared, is the cattle market here. We've kept the marketing's current, kept the weights down, but now weights are starting to increase. That means we're going to add supply into the third quarter. Seasonally, our supplies increase, and we are expected to see a record amount of production in the third quarter, a record jump from the second quarter, and that's causing a lot of liquidation. There's a lot of longs in this cattle market, and they are all running for the doors. That creates a bearish environment in here. Have a great day. Good luck, good trading. I'll be on RFD TV later this morning talking markets with Marlon Bowling. Have a good day. Talk to you soon.